Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of January 15th, 2024. We're going to touch on where we are in the S&P 500. We're going to look at the economic calendar and the reports that came out last week and are coming out next week. We're going to touch on the different sectors and how they're performing. And then we're going to jump into the live trades on the option trading platform. I think it's super important that we understand all the different strategies that the rich are using to get richer. Then we can use those same tools and strategies for ourselves to profit safely in any market. Please go ahead and hit the like and subscribe button down below. I appreciate it. It helps out the channel to get the video out to more people, so thank you very much. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning, I recommend you start small. All right, let's see where we are in the market today. With the S&P 500, this is a 5-day chart, so we can see that we were just up. We started the week in the SPX at 46.97 and ended up at 47.83. So up about 2.1% last week. And year to date, not much different, but let's see here. If we go year to date, yeah, you can see that we are pretty flat. We are up around a little bit less than 1% year to date. We started the year at 47.43, and again, we're 47.83 right now. And if we go to the economic calendar, and if we look at last week is at the bottom, we can see that we had core CPI, which was 0.3 as expected on Thursday, and then we had the core PPI, which was 0.2% as expected as well. So they were pretty much in line. And next week we have retail sales on Wednesday. Let's see. U.S. retail sales on Wednesday, 0.4% expectation. Thursday we have jobless claims, and Friday we've got existing home sales. And if we look at interest rates on CME, the chart still indicates that the first cut will come in March and at the March announcement. However, the Fed has been talking about keeping rates higher for longer, so I don't expect the first rate cut until this May or June date. And I don't suspect that we're going to have one in March, but we will see. And with rates being higher for longer, he's concerned about inflation, obviously. And if we go to FactSet earnings insight report, we can see that for Q4, they're currently, the numbers are just starting to come out. So there is a minus 0.1% decline, but we'll watch this as we move along. And we can see the 12-month PE ratio for the S&P right now is 19.5, so it's above the 10-year average of 17.6. And then if we go to page 14 of the report, we can see for Q1, analysts are projecting 5.7% earnings growth and revenue growth of 4%, so that's good. And for the entire year, 11.8% earnings growth and revenue growth of 5.5%. So this will be, it's looking like a good year. And then if we go to page 33, I like to look at the PE ratios to see where there may be opportunities for us. Financials, still a little bit high on the PEs, 14.5 versus the 10-year average of 13. Energy I still like, and it is a deal right now at 11 PE versus 15.6. And utilities are down as well. So we'll keep an eye on those going forward. And then if we go to the different sectors and we look at the 5-day from last week, energy was the one that was down biggest, 2.3% down, and then utilities down 1.88%, and then Financials were down a little. We'll talk about that, but financials, some of the big banks came out with earnings, and they were not too red hot. JP Morgan was pretty good. Year to date, again, we're up in healthcare, consumer staples, and communications, and discretionary is down quite a bit. So let's jump into the trades that we have on. And the first one, I actually added this. I was going to stay away from crude oil, but it was, let's see, it's at 72. So it is at the lower end of the range, and I'm long crude. I think that, you know, we've got the conflict going on in the Middle East, and we don't have too much in the strategic petroleum reserves. I think Biden released more last week, so there was a little bit of a down move in oil. But I think going forward, I expect oil should be will move higher. So I'm looking to make $190. I'm down with that release of the oil, but still, I'm not too worried about it. We're 31 days out, and I think it will move up. But I'm looking to make $190 on a 1/2 point spread, the 72, 71.5 put credit spread that was sold, and so we're risking $310 to make 190. Adobe is a trade that we've had on for quite a while. It is now at 596, and the IVR is very low at 0. I've got one tranche on in February. I got hurt with earnings. My target's 680, so it's still much higher than where it is right now. But I did close January and rolled to February moving forward. The next one, so we've got AMD next, and AMD, I'm closed out my calls, and we've done pretty well over the last, I think, 6 months. We've done, $523. Trading both sides for the most part with AMD, but it's at 146 right now, so it is above our 140 strike. If we look at the curve mode, we can see anything above 140. We've still got quite a bit left. We've got $550 left to collect in extrinsic value in the next 33 days. So I like AMD right now going long. And again, I closed the call credit spreads and rolled to February. And right now, I've only got put credit spreads on. If there's a big up move at some point in the next couple of weeks, I'll probably throw on call credit spread. But yeah, it's actually right at my target range trend line. Bank of America, some of the banks. Well, actually, let's talk about Amazon first. I don't have it on, but I'm kind of looking at it. It's a behemoth, as we know. It's got earnings in February 1, but it's trading at 154. If we look at the chart, we can see it is still pretty high. So I'm kind of waiting for a pullback to add more, but I'm just getting in small. My target for Amazon is 200, so it's much higher than where it's at now. We've done okay. I think over the last 365 days, we've made a couple $100, but not a ton. Yeah, almost $300, 294. But Amazon's low, so I'm long Amazon and think it will do well going forward. Okay, moving on now. Bank of America. We were, wow, in the 30 days, we were down big, and the banks finally started coming back. We're still up a little bit in the last 30 days since we started putting on trades again. But I was on this one up over $300 last week. So it did get hurt after earnings were announced on Friday. All the big banks did. I've just got the one leaps option, so it is smaller. I'm going to be doing a video coming out on SoFi this week, and I'll talk about the earnings for Bank of America, so we'll get into that. But I'm holding Bank of America. I've got a small position, not a big deal. And I think the banks are going to do fine going forward. Chewy, we've got a 22.5 put So Chewy's been a good stock for us this year. I love the business online. If we are profitable, anything above 20, so we need it to move up a little bit. The 1 year chart, it's way down, but I think there's a ton of room for growth, and it's going to do well going forward. I did roll to February, and it's been trading in a range between 17 or 20 to 25, but my target's $34 on Chewy, so I'm going to stay long. And it's staying in that range, 19. I think it was 20 last week, so it just moved down a little. Costco, I'm short some calls. I closed some of those out. Actually, you know what? I'm going to move to coin. We don't own it anymore, but we did do pretty well in it and closed out some positions last week. So we made $183 just in the last 30 days. And, in the last year, we made 591. And what it did, it made a big up move. And when it was up here, that's when I sold the call credit spreads. Anytime there's a huge move straight up like that, that's a good opportunity to look for call spreads. But we'll look for that one again. Right now it's been down, so I don't have anything on, but we'll keep an eye on that moving forward. Costco, let's see. We've got call credit spreads in Costco. It's moved up quite a bit in the last week, up from 656 to 683. So a big move up just recently back to that resistance. So that's why I'm still short Costco. When it did approach some of my January calls, I did close those out just to reduce risk, and because we're so close to expiration with 5 days. But I've still got on my 695, and there is still some premium left in that. Basically $100 left in that one. But overall, with moving those out to February, I basically rolled the January positions to February. Stayed short, even though I like Costco. It's just had too big a move up, and it's now at resistance again. But I need some negative delta trades in case the market goes down. So we've got $957 in extrinsic to still collect in February in Costco. So we do have the retail numbers, remember, coming out next week. So that'll be interesting to see. That will probably affect Costco and the stock price. Chevron is at 147. I threw on a put credit spread. Again, wanted to get back into that. I think oil is going to play higher. I just did the real small 145, 150. Actually, I rolled to February. So you can see if you look here in the last 30 days, we did a $3 wide in January and collected $96, so close to $100. I just rolled last week out on the 9th for another $105. So now we've collected, $200. We're down, but we moved out to February. So all we need is a move up, and then we will collect that $200 basically in profit that we have. DraftKings, love this stock. I think it's one you should look at if you don't own it right now. I've got leaps, 3 different leaps options, and I've sold calls against them, and they've all been profitable. But we're at $32.95 stock price and IV rank of 26. Earnings coming out February 15th. So actually after the call expiration date, and 35's got quite a big range for it to move. So we are in the profit range already. We move up a little, we make even more money. And DraftKings has done pretty well. There was a move, $281 over the last 31 days, and then year to date we've done pretty well, I think. Yeah, $1,403 over the last year. But my target for DraftKings is basically $50, so we're still way under. Google, I threw on a trade just to get in. Actually, you know what? I'm going to talk about FedEx because we did close that out. And basically, what I did in FedEx, we got back to even. So with 9 days to expiration, I went ahead and just closed out. If we look at the 30-day, I wanted to get back to even, and that's basically what I did. But I closed out on the 10th, so last week, and yeah, I paid a debit. The market, I just didn't want to get that too close to expiration, and FedEx is not the most liquid. So, I was hoping to make a couple $100 on the earnings trade, but we got back to even, which is good, and closed it out, and we're done with it. So, um, Google, like I mentioned, I just threw on a put credit spread, $5 wide, and Google's a behemoth, and my target's $200 on Google. I think it's going to do great this year, so I wanted to get something on. So I did a $5 wide put credit spread, and we're already up $43. And over the last 6 months, we've made $568 in Google. I was waiting for IVR to come up, which it did, and it came up to 39, and that's why I went ahead and threw that one on. And Google has earnings on February 1st. IWM, and again, my target, yeah, $200 on Google. IWM, the Russell, I think it's going to do well this year, small cap, $3 wide, wanted to collect, a third the width, so collect $100. And IVR's at 29, the price is 193, so we're at the lower ends, but I'm not too concerned about it. I'll just keep rolling throughout the year and probably keep a put credit spread on in IWM all year long. L3 Harris, we had closed that one out and done really well in it. Over the last, where's L3? L3, and over the last 60 days, yeah, we've made $680, but it did move up. The IVR is up there right now. Let's see if we can span. Okay. Well, I'm looking to put on we're at 207. I'm looking to put on a put credit spread, so just kind of waiting for the right time. IVR is at 44. And my target's 240 for L3 Harris. But they do have earnings coming out January 25th. And but I'm going to keep my eye on that one. And I've got a trade in there way above the market. So any down move, I'll put that on as soon as it looks good. Lockheed Martin, very similar to L3, with the events going on in the Middle East. I think defense stocks are going to continue to do well. Lockheed Martin's done well, just like L3 Harris. In the last 60 days, I think we made $384, and we're already at max profit on this. I just haven't closed it yet, but I need to do that. Probably put another one on in February. But you can see the chart is moving up, but I do have a higher target than 463. It's actually 500 is my target, and they've got earnings on January 23rd as well. So I'm going to look to keep that one on. Lulu has done pretty well for us. It's at 479. It's down from 491, and we are up in Lulu. Let's see, in the last 60 days, I think we've done, it looks like $978 we've made just in the last 60 days with iron condors that we've sold, and we still have $432 left in the trade. I closed out the calls. No, actually, I've still got a lot of January on, but I did put on some new positions in February, and I did a video on that one as well on putting those on and why. There's no earnings coming up, and Lulu's been trading in a pretty tight range here, actually just over the last month or two. But Lulu does move a lot at some points, and then sometimes it seems to be range bound, which seems to be right now because it is at highs. Palantir is another one that I really like long term. Let's see, Palantir's at 16 price and 16 IBR. We've been we've got 3 leaps options, and then we've sold calls against those. So those are poor man's covered calls. And in the last 60 days, we've made $426 in Palantir. But my target for Palantir, it trades in that $16 to $19 range. And I kind of just watch it between that range and make sure that I've got, I like to trade in this account 3 different positions. So that's what I've got on. So I'm at max right now, but I think Palantir is great and going to do well going forward. SoFi, that's the one I'm coming out with a video on this week, but they've got earnings coming out on January 29th. I think that's going to be a big day. Could be the first quarter, Q4, that they're profitable. If not, I think they will announce that they're going to be profitable in Q1 that they expect to be. So either way, I think it's good news. But I've got, you can see right now, what is that, 12, 13, 14 different leaps options on in SoFi, and we had a much bigger profit, but with the big banks coming out with earnings last week and not meeting expectations, and their net interest income expectations was down, they kind of lumped SoFi in with them, although SoFi is a totally different type bank. There's no brick and mortar branches, and it's all online, and the younger generation really likes SoFi. And I think it's going to do great moving forward. I've got a video coming out on it this week, so be sure and check that out. So we'll keep an eye out for that one. SQQQ is just my hedge. That's the inverse short Qs. So when the market goes down, when the NASDAQ goes down, this stock goes up, and that's what I have it on for. If you look at the chart, you can see if it does move up, we move up. But again, when the market goes up, this will move down. When the market goes down, this stock will move up. So I like that one as a hedge. Tesla, I threw on a put spread last week, and Tesla's been a good stock to trade, but it's been kind of funky lately. My target is much higher, 370. It's up in the 350, 370 range for Tesla. But so I was really surprised it dropped further. But they've got earnings coming out on the 24th of January, so that's real soon. Because of the drop, I only did one. I went small, a $5 wide put spread. But I recently, last week, threw on a $5 wide call spread at the same short strike price, just to kind of hedge and protect myself. And that never makes sense really to go below your short put strike if you're adding a call, and just because then you can lose in both directions if it moves back up. But I'm just dipping my toes in at this point. I'll probably wait for earnings and then throw on more. They've got full self-driving, a tax credit that's coming at the beginning in Q1, I'm told. So I think that might increase sales in Q1. So I think moving forward, it's going to be great. Verizon is something that I add to when it's down. It's been staying at that 38 range, and it's got a 6.5% dividend, which is nice. My target's $40, so not too much more, but it's just kind of a safety type, and I own the shares in order to collect the dividend. Wells Fargo was hurt. Again, I'm doing a video on the bank stocks and the earnings, so talk a little bit about Wells at that point. But Wells came out and they missed earnings, but they didn't drop too much because the price was already very low. Anyway, I have the 2 leaps options on in Wells Fargo, and I'm just holding on to them for the long term right now. And the last one that we have is ExxonMobil and oil. I mentioned I really like it. I've got 3 put credit spreads. We're right at the profit zone, max profit. We just need to be above 100. We've got $549 left to collect on the 3 put option spreads over the next 33 days. So I'm expecting oil to do really well moving forward. And we've got some more earnings out next week. Keep your eye out for that. There's a lot more banks that are coming out, so that'll be interesting. Some of the regional banks as well. All right, guys. Hey, thanks for watching. I put a link down below for the free options workshop. Remember to grab that. Remember to hit like and subscribe. I appreciate any comments that you have. Let me know what you're trading. Any questions, I answer every one. I'll see you in the next video.